All right, greetings and thank you for joining us at futuremoneytrends.com. I have a great guest today. It's everybody's favorite topic. We are going to talk about silver, and we're also going to talk about the mining shares and opportunities that are out there, as well as addressing this recent pullback we're seeing right now in middle to late August. Our guest today is an editor at the Morgan Report. His name is Chris Marchese. I've met him, over the years, probably since 2012 at the booth with David Morgan, also editor at the Morgan Report. And he's a wealth of knowledge. He's an economist, guy's run a hedge fund before, really well-rounded individual to speak with. Chris, thank you for joining us.
It's my pleasure.
Chris, let's start off and address what's probably on everybody's mind. They've had amazing success, especially with the higher quality companies. Everybody's seeing, 400, 500, up to 800% gains just this year since late January. And now there's a pullback and everybody's sitting here almost with post-traumatic stress. And I just wanted to kind of talk to you about what are your thoughts on this recent pullback right now that we're seeing in August?
It's very healthy. I mean, we went up for 8 straight months. It was the best first half ever in the mining shares. And after that, you tend to get a lot of froth through speculative investors. They saw the run up during the first few months, hop on the bandwagon, ride it for a while, then they jump off because they don't actually believe in the story. They just look at the charts and ride the momentum. And now that we're in the dog days of summer, volumes died down. So I wouldn't be surprised if there were a further pullback both in the metals and the mining shares. But it's a great time to add to high-quality names. If you look at the valuations, a lot of the silver shares are trading as if silver were anywhere between $24 and $30 an ounce. So they're pricing in higher metal prices already. Which, is not an uncommon thing because the mining shares tend to be leading indicators of the metals price.
Sure. Now, I know there was a lot of private placements, about 600 of them in second quarter. Do you think this is a headwind? Because a lot of investors out there have shares at 15 cents. Stocks are trading for $1.50 to $3. They got a full warrant. Do you think that has anything to do with it? Because I guess the April ones would have started coming free trading in August, and we probably have more coming free trading September and October. Is this just part of a normal bull market, or is this something that we might have a little headwind out because we came out of a 5-year bear market where everybody lost a lot of money and wasn't making money, and now all of a sudden they're sitting on really, really large gains?
It's probably a combination of the two. I mean, say you were involved in a private placement last year and you got a full warrant, deep in the money, strike price. You go into this year, the share prices basically rise exponentially during the first four months of the year. You exercise those warrants, and you don't want to sell them because, you got to pay all the taxes. And if you're an investor in, say, 2014, 2015, you believe in the story. You're not just there after the fact, after everything has rebounded.
Are we in a confirmed bull market? And if we are, what are some of the signs that you can tell listeners that, hey, look, this really is just a correction in a bull market? This is not just this last 8 months isn't just some sort of relief rally in the bear market, a longer term bear market, but we are actually in a bull market.
Yes, it was confirmed the beginning of the year. Both metals put in their lows, and it coincided with basically the world economy falling apart. I mean, even though the U.S. numbers look okay, they're doctored to death, and they're still very marginal, and they're a lot worse than they were over the last couple of years. And so, it's a healthy pullback in a bull market. I mean, even this pullback hasn't been very robust. It hasn't been a real pullback. I mean, I would think a 10 to 20% retracement from the top so far this year would be in order, and we haven't gotten there yet. If you look at Japan, they're talking about even more negative interest rates. Everything is stimulus. The Fed, I mean, everyone's called their bluff. We got Brexit, so everything's just falling into place fundamentally for the metals. We saw record investment demand last year. Could continue this year if you include the ETFs. And it's just hard to say how it's not in the bull market.
I was actually in Vancouver just a few weeks ago for the Sprott show, and there's definitely a sea change. I mean, the big money is coming back in, the institutions are coming back in, and of course, as you know, 52-week high followed by 52-week high. I mean, it's just, there's definitely a sea change.
You see there's a much the price action in the metals is a lot different than it used to be. I mean, every few days, every couple weeks, we would be expecting a takedown. That's not happening anymore. These are more like the days of 2009, 2010, early 2011.
Sure. No, very, very true. And it's so funny. A lot of people, though, they do get very insecure very quickly about this market. But look, there have been tons of gut-wrenching moments in the market, whether it was the 2009 or early 2000s. It happens. Chris, on the metal, there's always been this attraction to silver with my listeners. Rick Rule talks about, in his years of resource investing for 4 decades, he would call, gold bugs. He's a self-proclaimed gold bug, and he's like, silver bugs are gold bugs on speed. That there's always so much more excitement with silver, and I'm guilty of it myself. I love silver. When you look at fundamentally, there are strong cases for gold for monetary reasons. There are strong cases for silver for monetary and industrial. And then for platinum and palladium, there are very strong cases because that supply is very, very thin, and they've got a lot of fundamental issues with their regions where they're produced. On the metals side, what are your thoughts on the precious metals? Is silver the best buy, or do you split it up, 25% silver, 25% gold, and then 50% platinum and palladium?
I would weight gold and silver quite a bit higher than platinum and palladium. That's just my personal preference. I think silver will outperform everything else. If you look at the gold to silver ratio, it's back up to 70. That's very high. If it were 40 or something, it would be a different case. So, personally, I favor silver. I'm overweight silver relative to gold, especially platinum and palladium, because yes, there's a supply issues on that side, but there's also demand issues, i.e., catalytic converters. Mm-hmm. So, they rely heavily on just, there's not as big of a monetary component because those haven't been used, for thousands of years as money. I mean, they will still do very well in the environment we're in and we're going to go through, but I don't think they're going to do anywhere as well as near as silver and gold.
Let's talk about the shares. Now, first off, before we do this, if somebody wants to actually see the stocks that Chris Marchese and David Morgan are following and suggesting to their readers, you can subscribe at themorganreport.com or silver-investor.com. I'll have those links up for you. So Chris, it's going to be totally up to him if he wants to say any actual names. We are definitely not asking him to, because I know the value of that letter is for people to go subscribe. So I encourage everybody to do that, especially right now. It's like a no-brainer. We're at like the very beginning, early innings of a bull market, and these guys are doing their homework. They're going around. They're kicking tires at these mining sites, and they know all the right people. David Morgan the head of the Morgan Report. He's been in the business for decades. So with that said, let's talk about the shares. And I want to specifically address the silver shares because I was looking at the silver producers, and you've got one silver producer, a primary silver producer, almost at 70%. Within probably a year, there'll be close to 80% of revenues coming from silver. And then the others, I was actually kind of shocked. The largest publicly traded silver company in the world, about 50% of its revenues come from silver. And then I also looked at some of the other popular names, people who kind of just, those are the go-to silver names. They're in the silver index. And same thing, some of them, less than 50% of their revenues actually came from silver. They could have been just as easily called base metal plays or gold plays. What are your thoughts on the silver producers and specifically the primary producers? Why are their revenues so low when it comes to silver? Why, has there just been a transition in their actual mines? Is it all to do with price?
So there are very few mines that produce just silver. It's usually about 65-70% of the time it's a byproduct of base metals or gold. Other times, there are a few mines. The one that is probably most highly correlated to silver gets the most revenue from silver relative to all the other metals is First Majestic. And it's quite rare to have that just because they're founded primarily in lead concentrates, copper concentrates, and it's rare to find a primary silver mine, and most of those are in Mexico. Another company, if you look at, is Fresnillo. They're the largest silver producer in the world. They recently added a lot of gold to their portfolio, so they're, it's a 40%, 60% silver or gold. But, a lot of this will change when silver prices rise further because, as they rise relative to base metals and or gold, more revenues comes from silver relative to all the metals in the mine. So it's not unusual that you have a company that, say, 40 to 60%, 70% of their revenues comes from silver. And yes, it's not a true silver play, but it gives you, almost as much silver leverage as there is out there. Simply because they're, pure silver companies are a very rare breed.
Yeah, it is fascinating just how rare they are. And with subscribers who are listening today, if they would like to get a hold of you, reach out to you for maybe a follow-up question, where's the best place for them to go?
If you want to send me a personal email, it's chris@silver-investor.com, or you can sign up for the Morgan Report free list, and you can send questions and we answer as many as we can. And of course, if you sign up for the newsletters, we answer your questions if you have any.
All right, Chris Marchese of the Morgan Report. Again, thank you so much for your time, sir. I really appreciate it.
Thank you. My pleasure. And now that we're in the dog days of summer, volumes died down. So I wouldn't be surprised if there were a further pullback both in the metals and the mining shares. But it's a great time to add to high-quality names. If you look at the valuations, a lot of the...
especially with the higher quality companies, everybody's seeing, 400, 500, up to 800% gains just this year since late January. And now there's a pullback and everybody's sitting here almost with post-traumatic stress. And I just wanted to kind of talk to you about what are your thoughts on this recent pullback right now that we're seeing in August?
It's very healthy. I mean, we were basically went up.
All right. Greetings and thank you for joining us at futuremoneytrends.com. I have a great guest today. It's everybody's favorite topic. We are going to talk about silver. And we're also going to talk about the mining shares and opportunities that are out there, as well as addressing this recent pullback we're seeing right now in middle to late August. Our guest today is an editor at the Morgan Report. His name is Chris Marchese.
For 8 straight months, it was the best first half ever in the mining shares. And after that, you tend to get a lot of froth through speculative investors. They saw the run up during the first few months, hop on the bandwagon, ride it for a while, then they jump off because they don't actually believe in the story. They just look at the charts and read the momentum.
I've met him, over the years, probably since 2012 at the booth with David Morgan, also editor at the Morgan Report. And he's a wealth of knowledge. He's an economist. Guys run a hedge fund before. Really well-rounded individual to speak with. Chris, thank you for joining us.
It's my pleasure.
Chris, let's start off and address what's probably on everybody's mind. They've had amazing success